Hello everyone and welcome to another episode of FinEase, an initiative by the BAF department of M.L.Dahanukar College of Commerce where we explain finance with ease. In today's episode, we'll talk about tax planning and management. You must all have heard your parents talking about tax, income tax return filing, the government is increasing taxes and so on. Albert Einstein once said the hardest thing in the world is to understand income tax. But you don't need to worry because we are here to help you find out more about tax planning and management. So today we'll have a look at what is tax planning, what is tax avoidance, what is tax evasion, and what is tax management. So let's get started. What is tax? A tax is a compulsory financial charge or some other type of levy imposed on a taxpayer who can be an individual or a legal entity by the government in order to fund the government spending and other government expenditures. So now that you have some idea of what a tax is, let us see what is tax planning. Taxes can eat into your annual earnings. To counter this, tax planning is a legitimate way of reducing your tax liabilities in any given financial year. It helps you utilize the tax exemptions, deductions and benefits offered by the authorities in the best possible way to minimize your liability. That is, when you have some earnings, you can use all the deductions and benefits offered to reduce your tax in a legal way. The definition of tax planning is quite simple. It is the analysis of one's financial situation from the tax efficiency point of view. Tax planning can be of various types. One is purposive tax planning, where planning taxes is with a particular objective in mind. You can also have permissive tax planning, where the tax planning is under the framework of law. And then there is short range and long range tax planning done at the start and end of financial year. If you need to plan your taxes well, you need to know what the term tax avoidance means. Tax avoidance means taking undue advantage of the loopholes or drafting mistakes for reducing your tax liability and thus avoiding the payment of tax which is lawfully payable by you. Generally, it is done by twisting or interpreting the provision of law and avoiding tax payment. Tax avoidance is an activity taking unfair advantage of the shortcomings in the tax rules by finding new ways to avoid the payment of taxes that are within the limits of law. Tax avoidance can be done by various ways like adjusting the accounts in such a manner that there is no rule, violation of tax rules, etc. Tax avoidance is lawful, but in some cases it could be a category of crime. Then comes a term which no person should ever opt for, that is tax evasion. Tax evasion means using illegal means to avoid paying taxes. Usually, tax evasion includes hiding or misrepresenting income. This might be underreporting your income, inflating the deductions without proof, hiding or not reporting cash transactions, or hiding money in offshore accounts. Tax evasion is a part of overall definition of tax fraud, which is illegal intentional non-payment of taxes. Fraud can be defined as an act of deceiving or misrepresenting. It is not legally permissible under the taxing statute. And last but not the least, we come to tax management. It means planning your affairs in such a manner that your tax obligation is managed properly. The objective of tax management is to comply with the provisions of Income Tax Act and its allied rules. Tax management helps in avoiding payment of interest, penalty, prosecution, etc. One important thing to know is how to save taxes. Taxpayers are provided with several options to reduce their tax liabilities. Various sections of the Indian income tax law offer tax deductions and exemptions, of which Section 80C is the most popular tax-saving avenue. For example, deposits in Public Provident Fund (PPF), 5-year bank deposits, National Savings Certificate, investment in ELSS schemes, etc. The best and the most optimum way to save taxes is by laying out a financial plan whenever there is a revision in your income and sticking to it. Also, it is a good habit to make tax-saving investments at the beginning of the financial year to maximize benefits rather than making hasty and often incorrect investment decisions at the last moment. To do this, it is crucial to be aware of all the exemptions and deductions available to you. It is your duty to pay tax, but it is also your right to reduce tax outgo as much as one can legally do so. So invest wisely and get the most out of your tax saving options available. Hope you all might have learned a lot about tax management, tax planning, tax evasion and avoidance from watching this video. Don't forget to watch our other videos to learn more about finance with ease with FinEase. Till then, goodbye.